With the global markets in turmoil, traders are left wondering, would this lead to a market crash? In this video today, I'm going to share with you my thoughts, the strategies that I'm using in this volatile, uncertain times. And as you can see so far, including the S&P, the NASDAQ, everything, it's all in red today. And so far, we're going to be talking about Tesla, we're going to be talking about the NASDAQ, we're going to be talking about and Ethereum as well, and the Euro, and key levels that I'm watching. And right here, if we look at the NASDAQ, overall, I still maintain my bullish stance on the NASDAQ. I'm still anticipating for a continuation to the upside. I still want to see the NASDAQ reach for an all-time high. But in the meantime, this is a key level that I've actually been watching for quite some time. And right here, the reason is because price came down here, mitigated the consequence encroachment, and then broke a 4-hour structure. So two things I'm anticipating to see is it's either we come in here and this will be an area for support and then we'll potentially continue higher, or if this area fails, then this inefficiency is going to be my next draw on liquidity. That being said, the next one that I'm watching as well is the Euro US dollar. So for the Euro US dollar, so far we're still at premium. And if I'm to get into any trades on Euro US dollar, it has to be at a discount. Overall, I still maintain my bullish stance on Euro US dollar. And price coming to the downside, I'm looking for opportunity for a run on sell side liquidity and then potential continuation to the upside. As you can see, 6-month time frame structure, swing high, swing low, still remains bullish. And my overall drawn liquidity on the 6-month time frame still remains this inefficiency, resting right here. And we go to the weekly time frame. And on the weekly time frame, you can also see clear as day on the weekly time frame how we created a high, created a low, we broke structure, significant break of structure. This right here was the last down close candle before an expansion to break that structure. So that is a key level. This is a key level that I'll be watching for a potential retest. If price comes in here, number one, this is discount zone. Number two, this is the last down close candle before an expansion to break structure. Number three, the overall market structure from the 6-month time frame, 12-month time frame is bullish. So I'm anticipating for a continuation to the upside. So for whatever reason, be it for geopolitical reasons or for whatever reason, if I see price come down into this key level, I'll be watching for a smaller time frame shift in market structure, for the smaller time frame to align with the bigger time frame, being the 6 months, the 12 month, the 3 months, the monthly. I just want to see the smaller time frame align with that bigger time frame. And when I say the smaller time frame, I mean the 15 minutes time frame, 5 minutes time frame, or 30 minutes time frame. Any one of this break of structure within this key level, I'll look for a buy setups for this to continue higher, because overall we still have our drawn liquidity being the 6 months inefficiency. Now the next one we're going to look at is we're going to look at Ethereum. Key levels I'm watching on Ethereum. For Ethereum, we still have sell side liquidity here, buy side liquidity here, inefficiency here, and another inefficiency here. Personally, I prefer to see the inefficiency right here get mitigated and then potentially continue to the upside. But if that doesn't happen and price comes in here, then maybe this will be an area for resistance unless price wants to smash through, continue higher. Overall, I'm still very bullish on Ethereum. I want to see a continuation to the upside. Now, because of everything happening around the world right now, every trade setup I'm taking, I'm going to be using minimal risk. The reason is anything can happen and boom, the market just crashes and your account just blown. So that is why in uncertain times, I always use very low risk in my trade setups, and I don't try to over leverage. I never over leverage whether anything is happening around the world or not. I never over leverage. I always use a minimal risk, aiming for low risk and high reward trades. Now, the next one to look at is Tesla. What is Tesla doing? Are we heading for a market crash for Tesla? Overall, I'm still very bullish on Tesla. I still want to see a continuation to the upside. I have my low resistance liquidity, relative equal high, low resistance liquidity. So the only key levels that I'll be watching, price might want to retest those key levels, is right here. So we'll have a high, we'll have a low, we'll have a break of structure. So I wouldn't really be surprised to see price want to come down into this box right here for a mitigation and then potentially continuation to the upside. So if I see that, then that'll be an area I'll be looking for lower time frame breaks of structures like 30 minutes or 1 hour break of structure or 4-hour break of structure right there. If I do see that, then that'll be opportunity for me to look for a continuation to the upside. And like I said, I'm always going to use very low risk on my trades because we're in an uncertain times and anything can happen. And the last but not the least, before I wrap up for this one, is the dollar. As you can see on the dollar, overall, this key level here is my drawn liquidity, but don't forget we have this inefficiency resting right here on the monthly, which could potentially attract price to the upside. And if I'm bearish on any asset class, be it forex, commodities, crypto, stocks, if I'm bearish on it, the first thing I want to see is a run on buy side liquidity before a continuation to the downside. The reason is because a lot of traders are already going to be selling, and if they're already selling, there's going to be stop losses resting at the upside, and that is the buy side liquidity. Price will potentially want to sweep the buy side before a continuation. So right here we have buy side liquidities resting right here. If we go into the weekly and daily time frame, you can actually see it much clearer. We have low resistance liquidity here, inefficiency here, low resistance liquidity here as well. So price could want to come in here for this or for this, any one of the two. The market could be hunting for that before a potential continuation to the downside. So this is my thought process on the market, and if you found it insightful, give it a thumbs up or follow me for more content like this. I'll see you in the next one.